Hi, my name is George Dagnino. I'm the editor of the Peter Deck portfolio. You know, I spent my life finding relationship between markets, and that's my passion. And the other day, I saw the relationship between gold, bitcoins, bonds, and the stock market. The point being, where should I put my money? What is the asset class or the investment that is going to outperform? And the relationship is so strong and was so excited. So I put it what I found out in this video. So let me discuss what I found. This graph shows the relative performance of low-grade bonds relative to TLT. When the curve rises, it means that low-grade bonds price appreciation is faster than TLT. When instead the curve declines, TLT is outperforming low-grade bonds, and so on. This is HYG, the low-grade bonds outperform. Here TLT outperform. Here low-grade bonds outperform. Here TLT outperforms. Right now, low-grade bonds are outperforming Treasury in terms of price appreciation, meaning that the spreads between the two yields keeps declining. Now, why is this important? Because what this means that there is so much liquidity that when low-grade bonds appreciate here relative to Treasury, there is enough liquidity that investor buy find more opportunity in low-grade bonds, not only for their price appreciation, but also for their higher yields relative to Treasury. So every move on the upside in this graph is strength in low-grade bonds, declining spreads, and especially what it means from an investor viewpoint, there is plenty of liquidity to encourage investors to buy low-grade bonds relative to Treasury. When instead the curve declines, means that now liquidity is declining and investors are seeking a more conservative investment like Treasury relative to low-grade bonds. So this curve, in a way, is a measure of risk. Here there is no risk. Here risk is increasing. Here risk is declining. Here risk is decreasing. Here risk is declining. Here risk is increasing. Right now, risk is declining. There is plenty of liquidity. That's what the markets are saying. There is plenty of liquidity. Investors are buying low-grade bonds because they feel confident that between the yield and the price appreciation, their performance in that kind of investment is superior than just investing is Treasury. Now, I spent some time on this curve because this is what drives all the other markets. This measure of liquidity tells you which markets are going to outperform relative to others. Let's see what happens. Okay, this is the chart that I showed you before. The spreads, uh, liquidity increasing, liquidity decreasing, liquidity increasing, liquidity decreasing, liquidity increasing, liquidity decreasing, liquidity increasing. Why? Because low-grade bonds are performing better than Treasury. So that means there is so much money that investors move into low-grade bonds. Look, the relation is the lower chart is commodities, is the CRB. And look what happens. When there is a plenty of liquidity, commodities rise. When liquidity is tighter and people go into treasuries, then what happens? The economy slows down and commodities decline. Liquidity increases, people buy low-grade bonds, plenty of liquidity, the economy is strong, and commodities rise. Then here, liquidity comes down, people sell bonds, low-grade bonds, they buy treasuries, the economy slows down because of the slower growth in liquidity, and commodities decline. Same thing happened here. commodities rise. Here liquidity declines, investor goes to TLT, commodities decline because the economy has a relapse. But now look what happens. Liquidity now is increasing, people are buying low-grade bonds relative to treasuries, and commodities are strengthening. So by following this graph, you already see the relationship between risk, liquidity, and commodities. This is the spreads as we showed you before, and this is the yield on the 10-year treasury bonds. Now see what happens. Liquidity is increasing, the economy strengthens, low-grade bonds outperform treasuries, yields rise. Spreads decline, the economy slows down, risk is increasing, yields decline because the economy slows down. And the seesaw continues. This is spreads decline, plenty of liquidity, the economy strengthens, yields rise because of the strengthening of the economy. Here risk is increasing, low-grade bonds underperform treasuries, spreads are rising, bond yields decline. And as you can see, everything is seesaw. Right now, the spreads are rising, and what you see, yields also are rising. So when you will see spreads declining, then yields will also decline. Let's see now how the change in liquidity, which means if spreads rise, liquidity is increasing. If spreads decline, liquidity is decreasing. The economy slows down, yields decline. And the same again, this increasing liquidity, decreasing liquidity, meaning that spreads are increasing, spreads are decreasing, spreads are increasing, spreads now are decreasing, as I discussed in the previous slides. Now the curve on the bottom panel is the relationship between TLT and SPY. When the curve declines, means that SPY, the S&P 500 is stronger than bonds. Here is stronger than bonds, and here is stronger than bonds. Over the long term, of course, stocks have outperformed bonds, and of course, the main trend is liquidity as increasing. So as liquidity increases over the long term, stocks outperform bonds. There is no question about it. So, but in the near term, you will see that here, instead, bonds have outperformed stocks in this period with liquidity decreasing. So as liquidity decreases, the economy slows down, bonds outperform stocks. When liquidity decreases and spreads increase, the economy slows down, bonds outperform stocks. When liquidity decreases and bond spreads rise, like here, bonds outperform stocks. Right now, liquidity is increasing. The economy is growing around 2.4% according to the models of the Atlanta Fed and the New York Fed, and stocks are outperforming bonds. What I found really amazing is to see the relationship between liquidity and risk and the relationship between Bitcoin and gold. If you think about it in a little detail, it seems obvious. But when you see it like on this chart, I found it really amazing. So as I said, the increase, this is spread decreasing. This is spread decreasing, spreads increasing, spread decreasing, spread increasing, spread decreasing because there is plenty of liquidity, spreads decreasing because of slower growth in liquidity, higher risk. Right now, plenty of liquidity, strong growth in equities and commodities. Let's see now how Bitcoin and gold respond to that. You wouldn't be surprised if I only tell you that Bitcoin behave like stocks, then the relationship becomes obvious. Because when there is plenty of liquidity, okay, you want to be Bitcoin outperforms gold. Because there is plenty of liquidity, that's where investors invest in gold. In Bitcoin. When gold starts outperforming Bitcoin, like in this period, is when liquidity decreases and spreads rise, means the risk is rising. So people get out of Bitcoin and go into a defensive play like gold. And gold outperforms Bitcoin during period of declining liquidity and rising risk. Gold is outperforming Bitcoin here, like in this period, when liquidity is decreasing and risk is increasing. So what I've been showing you is the relationship of liquidity and risk relative to Bitcoin, gold, the bond market, and equities. This is the book commissioned by McGraw-Hill, where I really treat all the business cycles and the business cycle and all the sub-cycles. And it's been translated in many languages, Europe and Asia. At Peter Dack's Business Cycle Academy, we have 3 different types of membership: videos only, videos and financial updates, and membership number 3, where we have the Peter Dack portfolio, is a 22 pages roughly analysis. You have also videos, model portfolios, market updates, and you will receive an email when we make our stock transactions. I hope you find the relationship between all these markets to risk and spreads fascinating, as I did when I put it all together, and it seems logical when you think about it. So I hope you found it useful. If you want to see more of this work, please go to www.patreon.com/Peter Dack. Thank you very, very much for reviewing this video, and I hope to see you really, really soon. So long and have a wonderful day. Goodbye.